What's up, guys? Hope you're having a good day. In today's video, I'm going to be giving you a portfolio breakdown for January of 2023, and I have made quite a lot of changes to my passive income portfolio. So to start, we once again broke $49,000, and for the first trading day of the year, I'm actually up 0.25% or $123.56. And the surprise here is that my worst stock, Verizon, was up 1.83%, and my third worst stock, Clorox, was up 1.37% to make me green while the rest of the market was red. Now, one significant change I made to my portfolio is I took the target allocation for real estate from 10% and I dropped that down to 8% because my goal for this upcoming year is to lower this actual percentage of real estate that's over 20% down as close as I can to 8% because a lot of my dividend income is coming from real estate. I think it's about 30% or something. So I don't want my income to be from my riskier stocks, which are my real estate stocks. I want it to come from my blue chip dividend stocks that you see here. And next up, I had a bunch of stocks that were 4% of my portfolio. Stocks like Duke, American Waterworks, Southern Company, IBM, and Microsoft and Home Depot and many others were at 4% allocation, but I actually lowered all of my 4% stocks to 3%. And the reason why is because I bought four new stocks, which I talked about in my last video, the four stocks I'm buying now for passive income. One of those stocks was right here, Medtronic. This is a medical devices healthcare company. And as you can see, I just have almost $112 in the stock, 1.4 shares at an average price of $77.15. And it's got a pretty nice dividend yield at 3.44%, but it also has a great dividend growth rate, which is what I'm really looking forward to. Next up, I bought Dollar General, which I have almost $111 in, 0.44 shares at an average price of $246.85. Now, this stock has a low dividend yield at 0.89%. However, this has a double-digit growth rate, which is what I care about more, is my dividend growth rate versus my yield, which, going back to the real estate pie, that has a very high yield, but it has horrible dividend growth. So that's why I want to put my money into these dividend growth stocks. Next up, stock I bought was Lowe's, and I have almost $110 in Lowe's for 0.55 shares at an average share price of $202.74. And once again, Lowe's also has a low dividend yield. It's a little bit better than Dollar General at 1.86%. However, Lowe's has one of the best dividend growth rates at about 17 to 19%. So I am fine with the lower dividend yield, the lower starting yield. Now, last up of the new stocks I bought right here, Abbott Laboratories. So I have about $110 in this stock. It is also a healthcare stock, medical devices, and I have one share and with an average share price of $108.50. And this also has a small dividend yield, about 1.71%. That's fine because it has about an 8% dividend growth rate, which is fantastic. So other than that, that is all the major changes to my portfolio as far as the target allocations go. Let's actually look at my activity feed and just see what I've been doing for the past few weeks. So I started buying those four new stocks on December 19th, put $137.52, and I bought $34.38 of Abbott, $34.38 of Dollar General, Lowe's, and Medtronic. Then on the 27th, I deposited my regular $125 every single Monday. and I invested $125.01 for Abbott, Dollar General, Lowe's, and Medtronic. And we're going to see these stocks throughout the entire year. I'm just going to be buying up these stocks. Then, of course, I received three dividends on the 30th, $21.75 from Good, $7.68 from LTC, and $25.01 from BST. And then on January 3rd, which was a Tuesday, because the market was closed on Monday, I deposited that $125 and I bought the same four stocks: Abbott, Dollar General, Medtronic, and Lowe's. And it shows the one excluded. That is SCHD. I don't know why they thought they were going to buy SCHD when I have to build up these four positions. And one thing I'm a little bummed out about is I haven't received my ADP dividend, which I would have loved to have reinvested that right here on the 3rd. And that ADP dividend is going to be the increased dividend. So ADP increased their dividend by 20%. And I was really looking forward to seeing exactly how much money I earned from that. Because from my calculations, I believe I'm getting about a 90 to 93-cent increase per quarter on that dividend. So next up, I wanted to show you guys track your dividends again, show you currently my portfolio yield is 4.85%. And I want to say on the last portfolio update is about 4.79%. And then my yield on cost is 5.2%. So basically what that means, yield on cost is where you take your dividend and you divide it by your cost basis. And if your yield on cost is higher than your portfolio yield, that means your dividend income is growing. And the reason my portfolio yield is 4.85% is because of how much money I have into my real estate pie. As I showed you guys last time, if I go to my actual portfolio yield right here, my actual dividend yield for my portfolio is 3.224%. However, because I have so much money in real estate, it's boosting my yield up to 4.85%. Then, of course, they're projecting my annual income at $2,378. And then I have a portfolio beta of 0.67, which means my portfolio is really safe. Anything over 1 means your portfolio is really volatile. Anything under 1 means your portfolio is less volatile and more secure. Next up, I want to come to the future value because there's some more data over here. My 5-year dividend growth rate is 8.26%. I think in the last update, it was like 8.09%. So it's nice to see that adding those four stocks is increasing my 5-year dividend growth rate. And I'm really curious to see what happens as I invest more money into my portfolio and lower the allocation to real estate. I wonder if this is going to increase. That's what I believe will happen. So I could end up with a 5-year dividend growth rate over 10%, which hopefully, if everything works out, will beat inflation by a lot. I know we had high inflation this last year, but I'm hoping over a long time period, inflation gets closer to that 2 to 3% so that my dividend growth rate will outpace the inflation. And then if we just go down here, you can see in 20 years, they project my portfolio still, if I don't do anything, to be around $37,897. And then next up, I want to show you guys my dividend growth chart. As you can see, for the month or for the year of 2022, I received $2,344.41. And if we divide that by 12, I had an average monthly dividend income of $195.37. So my goal for the year of 2022 was to earn $200 a month in dividends on average. And I fell short of that goal by $4.63 a month, which honestly, I am fine with losing on this goal because overall, I I've done really well with my portfolio. I got rid of the problem stocks, which were QYLD, RYLD, and NUSI. Those would have drug me down. And if you guys don't remember, those three stocks, not only did I lose a lot of money from those stocks dropping in value, but my dividend income from those three stocks actually decreased by about 18 to 20%. So that is definitely not dividend growth. And I ended up being really negative, as you can see on the income pie. One of the reasons I have such a large loss is because I sold QYLD, RYLD, and NUSI at a great loss. And oh, looking here, my target for income, I lowered that from 3% to 2%. I'm not sure what I'm going to end up having income at later on. I know in the past I said I wanted SCHD to get to 40% of my portfolio and then probably have income 8%, but I'm not completely sure yet what exactly I'm going to do there. And so, guys, that is it for this video. Thanks for watching my update, and I will see you guys next time.